Hello, everyone. Welcome to today's webinar entitled Navigating COVID-19 Across the Pond. My name is Allison McKillop. I am a marketing manager here at Citron Cooperman. Before we begin, I would like to review a few housekeeping items regarding today's presentation. This webinar is 1 hour and 15 minutes. Based on your participation, you can earn 1.5 CPE credits. You may reply to 4 polling questions to receive full credit. You have joined in listening mode only. You will have the opportunity to submit questions to our presenters by typing your questions into the Q&A icon on the Zoom panel highlighted up above. An evaluation will be sent at the conclusion of this webinar. Please participate as we would appreciate your feedback. This session is being recorded and a playback link will be sent afterwards. With that, it's my pleasure to introduce our host, partner and practice leader of international tax, Leon Dukowitz.
Good afternoon. Thank you, Allison. On behalf of Citron Cooperman and Moore Kingston Smith, I'd like to welcome you to our presentation this afternoon. A little bit about Moore and Citron Cooperman. Citron Cooperman is the top 25 accounting firm in the U.S. out of New York. We have a very unique relationship with Moore North America and Moore Global. We are one of the larger players in the U.S. marketplace in Moore. Moore allows Citron Cooperman and our global affiliates to reach and have a network that is one of the largest accounting network and consulting networks in the world. It allows us to be in over 600 countries or 600 offices in 112 countries, and with a combined over 30,000 people. This is a unique opportunity for us to allow the U.S. constituents of Citron Cooperman the opportunity to hear firsthand from the experts on the other side of the pond with Moore Kingston Smith and their group. So with that, I'd like to introduce our speakers for today. First is Michael Hayes, tax partner at Moore Kingston Smith. Much of Mike's time is spent advising UK and US businesses in setting up in the other country. Excuse me. Mike presents often on doing business in the US and works closely with associated firms in US cities. Next is Allison, excuse me, next slide, Allison, please, is Nicola Horton, principal in corporate finance. Nicola has over 20 years experience providing corporate finance lead advisory services to a wide variety of quoted and private companies. She has advised on public offerings, flotations, private company acquisitions and disposals, management buyouts, and the raising of debt, development, and venture capital across a variety of sectors with a particular focus on the media sector. Our last and not least final presenter is Richard Cummings, Managing Director of HR Consultancy. And I think Richard's going to have the unique area of more questions and questions upon questions when he presents today. But Richard is an active in HR management for over 25 years. He's an HR professional advising businesses across multiple sectors in all aspects of human resources. He's heavily involved in designing and managing bespoke selection campaigns, creating financial schemes and that incentivize individuals in developing corporate HR strategies for clients. He's a generalist and a specialist. Richard measures performance to ensure clients benefit from the improved employee retention, productivity, and engagement. With that, I'll turn it over to Mike Hayes to begin the presentation.
Good afternoon, everyone. I think we actually start with a polling question. Is that correct?
That's correct. And our first polling question is, do you need CPE? We'll give the audience about 30 seconds to answer. Okay, the answers seem to have tapered off, so I'll end that poll.
Okay, can we move to the next slide, please? Thank you. Well, good afternoon. It's Michael Hayes here, calling you from rural England. It's a pleasure to talk to you all this afternoon. So the first part of this talk is really how you can secure help if you're struggling to pay tax liabilities for your UK subsidiary or your business in the UK. And it's an arrangement called Time to Pay. And broadly what it is, it's a hotline which was launched on the 11th of March. The phone number is on the top of the slide. It's a call handling service, so apparently there are 2,000 people to handle your calls. But broadly, if you're going to have difficulty with your cash flow, which means you're going to struggle to pay your business taxes, and by business taxes I mean corporation tax, VAT, and pay as you earn. Pay as you earn is the payroll taxes in the UK. You can actually telephone this hotline and actually negotiate some instalments. Now, what will happen is that you will negotiate whatever you can negotiate, and more about that in a minute. But HMRC will be looking for you to actually make payments on account of your outstanding tax by way of direct debit from your UK bank account. It helps if your tax reporting is otherwise up to date, so you've got a good clean tax record. They're more likely to look at you more kindly. And at the foot of that slide, I've actually put a link to our professional body in the UK, the Institute of Chartered Accountants, which gives some guidance about how you negotiate time to pay. So if you wish to do this, I suggest you click on that link and go forward. One of the things I would actually say to you is that it is really important that if you negotiate some instalments, that you are comfortable that you're going to meet those instalments. Because one of the issues that we find with HMRC is that they take a very harsh view if you actually negotiate instalments and then you fail to meet those instalments. They're very unlikely to be sympathetic. And sometimes it's better to have no arrangements rather than an arrangement which you probably can't meet, which may seem slightly illogical, but there you are. Can we actually move to the next slide, please? The second component of this is that there is an automatic deferral for VAT. VAT in the UK is paid quarterly, and what the government has said is that if you've got a VAT payment that is due to be made between the 20th of March and the 30th of June this year, you can simply defer that payment until the end of March 2021. It's a straightforward deferral, simple as that. You won't be charged interest or penalties on the amount that you defer, provided, of course, you do come and pay it next March. If you pay your VAT by direct debit, you need to actually cancel that direct debit to actually benefit from this, which is quite an important point. You still have to actually file your VAT return on time. But the deferral, providing you cancel any direct debit, is automatic. So, for example, if you have a VAT return for the quarter to 31st of March, you would normally be expecting to pay that VAT and make the return in the first week in May. You still have to make the return, but you can actually pay the tax in next March. Next slide, please. This applies to individuals. In the UK, under our self-assessment system, you make 2 payments on account of a tax year's liability, half in January and half in July. There is an automatic, so this will apply to people who are self-employed and people who have got income that's not sort of salary income, so investment income, income from property, etc., etc. The second payment on account for the 1920 tax year is due on the 31st of July. There is an automatic deferral until the 31st of January 2021, so there's a 6-month deferral. Again, this is automatic, you don't have to claim it, you just don't pay the tax. There are no interest and penalties if you don't pay the tax in July, but obviously if you don't pay it in January next year, they will start to charge you interest and penalise you. So that's quite a good deferral. So I think if we go to the next slide, and then I think it's handing over to Nicola, who's going to talk about some of the banking issues.
Hi, everybody. Yes, so in common with other major economies, the UK government has recognised that businesses are obviously going to struggle during the current period, and have announced a package of financial support, some of which Mike has already talked about, but also in respect of the banking system and being able to lend money to businesses that are affected. And so what they've come up with is something called the Coronavirus Business Interruption Loan Scheme, which goes by the acronym of CBILS. And this is intended to provide financial support to small and medium-sized enterprises that are seeing their cash flow disrupted as a result of the current virus. Clearly, there are an awful lot of companies in the UK, as there are around the world, whose business is effectively stopped. And so this is for them, or indeed for those that are just impacted, even if they're still managing to continue to trade. And the way the scheme works is that there's something called the British Business Bank in the UK, which is a government-owned lender. And it is operating the CBILS scheme via a bunch of accredited lenders, which include the main UK high street banks, so Barclays, HSBC, Lloyds, etc., but also a number of the challenger banks, the new banks that have sprung up in the UK over the last couple of years, and also some specialist lenders, asset finance, and so on. There's approximately 40 names on the list of people that you can go to for one of these loans. And the number should be increasing because there are a number of parties that aren't on that list currently who are seeking accreditation. Under the scheme, the government gives the lender a guarantee for 80% of the value of the loan to encourage that lender to lend off its own balance sheet. So that it's important to understand the support is not being given to the borrower, it is to the bank advancing the funds. The borrower remains fully liable for the debt. But recently they made some changes to this scheme insofar as if the borrower ultimately defaults, then only 20% of the outstanding facility can be recovered under any personal guarantees that have been given by the borrower. Originally when this came out, the borrower was on the hook for 100% in the event of default, and only if there was not enough under the personal guarantees that could be recovered did the government guarantee come into play. Next slide, please, Alison. So in order to apply for one of these loans, there are certain qualification criteria. Your business must be UK based in its business activity and in its borrowing. So a UK subsidiary of a US group could indeed apply, but it would have to apply for funding that was going to be used to support trade in the UK. And importantly, it must have a borrowing proposal which the lender would consider viable were it not for the current circumstances that we find ourselves in. And it is only to be used for the purposes of trading you out of any short-term to medium-term difficulty. So the point there really is that this is not a scheme for businesses that were struggling before the virus came into view. It's for businesses that were trading well, had good prospects, and have suddenly run up into extreme difficulties as a result of the virus. If you were a business that was struggling beforehand, and there is some evidence that the UK economy was starting to decline before the virus even came into view, then you would not be eligible under this scheme. Next slide, Alison. This is something that's changed comparatively recently. Obviously, this scheme is evolving over time. When it was first announced, the maximum value of a facility provided under the scheme was £5 million, and only businesses with turnover of less than £45 million could apply. But that changed comparatively recently, I think 7 to 10 days ago, so that it's now the maximum facility is £25 million, and businesses with turnover between 45 million and 500 million can apply. There's actually an additional scheme for companies that are much bigger than this, where they can borrow direct from the Treasury and Bank of England, but we're not covering that in this presentation, since we're mainly dealing with small and medium-sized enterprises. A couple of other points on this slide: the facility amount should not exceed twice the annual wage bill of the company. It shouldn't exceed 25% of the total turnover of the company in 2019, and it shouldn't really be for to cover the liquidity requirement of the company for more than the next 18 months. So it is meant to be a short-term facility, or to enable companies to trade in the short term, albeit the length of the facility may be rather longer. Next slide, please, Alison. It can be the facilities that can be extended could be a mix of products. Term debt and asset finance facilities can be taken for a period of up to 6 years, but most of the ones that we've seen coming through at the moment are more in the overdraft and invoice finance facility pot, and these can be for up to 3 years. As it says on the slide, there are no fees, and the loan itself is interest-free for 12 months, provided that is a loan for up to £5 million. So that is for businesses with under £45 million turnover. They're not actually no fees and no interest. It's just that the government will pay on the business's behalf any lender fees and any interest for the first 12 months. That provision does not apply for the larger loans for businesses with turnover between 45 million and 500 million. Next slide, please, Alison. As far as security is concerned, this is something that has evolved since this scheme was first announced. Originally, banks were able to take personal guarantees as security for any facilities advanced under this scheme. It's now been stated that lenders are not allowed to take personal guarantees for so long as the facility is less than £250,000. That has actually led to a couple of lenders pulling out of the scheme because they're saying it doesn't work for them if they can't take PGs at that sort of level. Importantly, primary residential property cannot be taken as security under the scheme. And then, as I said earlier, even if you do have to give a personal guarantee, if in the event that you default on the loan, only 20% of the outstanding facility can be recovered under that personal guarantee. The bank is expected to go to the government for the 80% in the event of a 100% default. Next slide. Oh, thank you. So from our customers and clients who are looking to take advantage of these schemes, yeah, as I say, it's an evolving situation because the banks themselves didn't know they were going to be making these loans up to 3 weeks ago. But it's becoming clear that what the banks are trying to do is run a fairly schematic and scaled back, if you like, credit process, because they need to get money out the door quickly. But nevertheless, they would, as part of the credit application, expect businesses to be able to articulate how COVID-19 has impacted the business specifically. This is to weed out those businesses who are applying for a loan, but they were struggling before the virus came in, if you like. How do you plan to trade in the short to medium term, or how do you plan to cover your financial obligations if you are unable to trade in the short to medium term? Are there any fundamental changes to your business model and or industry as a result of the virus? That's short term, as in, we work in the theatre industry, our theatres are closed, versus are there some structural changes that people think may come about as a result of the virus that could last for the longer term? How have you arrived at the funding figure requested? So you need to be able to demonstrate a business plan and to provide a cash flow forecast for the next 12 months to show how you've arrived at the figure that will enable you to trade through this difficult period, support your business, and make sure it's in the best possible place to come out the other side. And I think that's it for me, but I understand that we're going to a second polling question, so I'll hand over for that.
Yes, our next polling question is, do you have business presence in the UK? We'll give about 30 seconds for that answer. Okay, answers have tapered off, and here are the results.
50-50.
And now I think it's back to Mike.
Okay, thank you, Nicola. So we're going to run through 3 more areas where there's government support as a result of COVID-19. And the first one is concerning business rates. Now, business rates are a property tax for business premises. And there are basically 2 types of relief available. So the relief available depends upon the rateable value of your property. Now that you can actually find out if you've got premises in the UK. There's a website where the link is there, and you can put in your address, and it will actually tell you what the rateable value of the property is. And the second depends upon the sector you're in. So for an initial grant that you can obtain from your local authority, which would normally be a county council or a city council, if you're in London, if your rateable value is below £15,000, then yes, you can get a grant for this year of £10,000 from your local authority towards the cost of your business rates. If your rateable value is more than £15,000, then whether you get any support thereafter depends upon the sector you're in, and the relief only applies to those businesses in the leisure, hospitality or retail sector. So if you're not in that sector, there's nothing else you can get. If you are in that sector, then the first thing you can obtain is a 100% relief from your business rates for the current financial year 2020 to 2021. On top of that, if the rateable value of your premises is less than £51,000, then you can have a grant from your local authority of £25,000, which is clearly helpful. If your rateable value is above £51,000, you do not get a grant. Now, just to sort of throw in why it's targeted very heavily at the sort of retail sector, and this is really because and I don't know if this is the case in the US, but those online places where you can buy goods, and I suppose I'm thinking of Amazon, typically are out of town. They're in locations where the level of business rates are much less than those in the high streets of towns and cities in the UK. So the relief has been directed at smaller retails in town and city centres to actually help them compete. Next slide, please. So the next slide is all about help for the self-employed, and I'll go through this very quickly. Broadly, if you're self-employed, the government will actually give you 80% of your trading profits, those being your trading profits for the years 2016 to 2017 to 2018-19 inclusive. You can have a grant of up to 80% of those, limited to £2,500 per month, and you can have that for the period from March to May, so for 3 months, which is quite a generous grant. Next slide, please. You must have submitted your tax returns for all those outstanding years, and if you've not filed your 18-19 one, you need to do so by the 23rd of April. You must have traded in the 19-20 tax year, and you would be expected to continue to trade when the application is made, or would be, except for the impact of COVID-19. Next slide, please. You should you should have the intention of continuing to trade in 2021, and your trading profits to qualify for this have got to be less than £50,000 per annum, and your income from your self-employment must represent more than half of your total income. So if you've got a large if you've got employment income and investment income, which together amount to more than half of your total income, then you will not qualify. There are some mechanisms for working out actually the averaging basis, which are set out there, which I don't intend to go through, because I suspect most of our listeners will not be self-employed. But can we go to the next slide, please? This will be available in June or July each year, and any payments will be paid as a lump sum by bank transfer, and it will form part of your taxable profits if you're self-employed. You will actually add it to your income, and it will in your months, and it will be treated as such. Next slide, please. Before I invite the polling question, there is one thing I would just make you all aware of, is there are quite a lot of emails being sent to businesses and to individuals inviting them to claim under the various reliefs which we're talking about today. It is important to make you aware that HMRC do not send unsolicited emails to taxpayers. Now, they might email us in very limited circumstances as professional advisors. So if you are emailed at all, or if any of your employees are emailed at all, allegedly from HMRC, it is a scam. It's a phishing scam. So please just bear that in mind. And before we continue, shall we go for the next polling question?
Yes, our next polling question is, have you taken advantage of any UK relief measures? Okay, that's about it. I'll share the results.
Okay. Very interesting. Well, hopefully a few more after this. So what we're now going to talk about is probably what the major relief in terms of tax is that's been introduced by the UK government. And this is where the government will, for a period of 3 months, from the beginning of March to the end of May, initially, it might be extended, will pay a grant to employers where they furlough employees. Now, there's a whole load of questions on here, which I'm actually going to hand over to Richard to answer. But just to give you some background to this and explain how it works for tax, is basically if you say to an employee, I'm going to furlough you, which means you send them home and they don't do any work for you, it has to be for at least a 3-week period. What the government will do is actually pay a grant to the employer, and that grant is either 80% of the employee's salary or £2,500 per month, whichever is the least. So just to give you an example, if you have an employee of your UK subsidiary who's, say, on an annual salary of £30,000, then 80% of that is £24,000. Divide that by 12, that's £2,000 per month. So if you furlough that employee, the government will actually give you £2,000 per month, as that is lower than the upper limit of £2,500 per month. They will in fact reimburse you a bit more than that, and that is because the employer, so what we call employer's national insurance over here, which is in your terms the employer's social security contribution of 13.8%, the government will also cover the 13.8% on the £2,000. And there's also a statutory pension scheme over here called the auto enrolment scheme. and the minimum employer contribution to that is 3%. And again, they will cover the 3% on the £2,000 as well. So on top of the £2,000, you'd effectively get 16.8%. If you're actually paying more than the 3% minimum, they say if you're paying 5%, they will not cover that. So it's just the basic minimum they will cover. Now, I'm going to hand over to Richard, but one point I would make is that this is open to foreign nationals. Clearly they need to be, I have been asked by a lawyer acquaintance of mine in Atlanta who said, will this scheme cover employees of any US subsidiaries of a UK company? And she said there's no harm in asking, because obviously the answer is no. But clearly it can cover foreign nationals. So if you've got US citizens working in the UK for a UK subsidiary and they're paying tax on their earnings in the UK, and you furlough them, then potentially they're eligible. So at that point, I think it's probably best for me who's our HR expert, because a lot of the matters are really HR related.
Thanks very much. Can I have the next slide, please? Okay, so it was Friday the 21st of March at about 5 o'clock when the government did their announcement to talk about furlough. And in the UK, furlough is a relatively new term, as in none of us had ever heard of it until Friday the 21st of March at about 5 o'clock when the government announced it. But what we are used to is layoff, and in the UK, layoff is a general term that's been used for a number of years. And traditionally, when someone's laid off, the payments, the guaranteed payments that the company has to give is quite minimal. So to come up with something like this was quite revolutionary. So as Mike said, it's open to anybody that's working in the UK and on a PAYE reference number. Originally, when it came out, the guidance said that it had to be a UK registered company that they were working for, but that's actually fallen off. And as long as you have as long as you're PAYE, then actually you can claim. The employee retains the whole of the 80%. What you can't do is start taking some of that money out for yourself. You can top it up if you want to. There's no obligation to top it up though. The only obligation is to pay the 80%. The 80% is based on the current salary. So employees variable pay. So in the UK, there's 0 hours contracts or casual contracts. Effectively, they have no set hours, so therefore they have no annual salary. They just work as and when they're required. Those employees, or their workers really, but those employees, the way that you calculate the payment is it's based on the previous year's earnings. So it'd be if you furloughed them in April, you could look at the whole 12 months from last May to April, or you could look at April last year, and whichever is the greater is the wage payment you would use. Overtime and commission isn't actually included. So if you pay commissions on a monthly basis, as long as they're not guaranteed commissions and they're commissions that are based on sales, they wouldn't be included in the calculation. And that the only overtime that would be included would be the overtime that they'd already completed. So if they'd completed overtime in March, for example, and then you were due to pay them in April, you should still honour that payment in April. The company actually continues to pay their employees and they reclaim the money from the government. They're generally, well, most employees in the UK should have a contract, and the contract would have a specific payroll date. If it has a specific payroll date, then you should continue to pay that. If you don't pay that wage or that 80% on the payroll date, you're also breaching their terms and conditions, and you could just open yourself up for some litigation costs in the future. As Mike said, you still make the pension contribution. The employee contribution is 5%. So it's obviously 5% on the 80%, not 5% of the original 100%. So they only pay the percentage of what they're actually getting. Salary sacrifice schemes over here is a tax efficient way in which you can access certain benefits such as pension and child care vouchers. Salary sacrifice is actually a contractual benefit, so that would continue in the same way. So even employees on reduced hours, and a number of clients and a number of companies over here did this. Before the 21st of March when this was announced, an awful lot of companies already asked people to work shorter weeks. So they may have asked people to work 3 days a week rather than 5 days a week. One of the things that came up was, could you furlough them for those 2 days and reclaim the money that way? Well, actually you can't. It has to be a whole period. So it has to be a continuous period of worklessness for those 3 weeks. You can't just do the odd day here and there. The scheme doesn't work like that. Could I have the next slide, please? Okay, so if an employee has more than one job, it's quite common. We are in the gig economy, so you would expect some people to have more than one job. You can actually furlough them and they're still permitted to carry on working in their other role. In fact, if an employee works for you, they could go and get employment somewhere else. So you could furlough them and they could get 80% of their salary, and they could go and get a job working in this during this period, and they could still get that money and retain the scheme. The guidance at the moment doesn't say you can't do that. It may be updated in the future to say that you're not permitted to. However, that hasn't happened as yet. Can we simply tell them that they're being furloughed? They're not really. So generally, in a contract of employment, there's a number of clauses. If there was a contract, if there was a clause which specifically mentioned short-time working or mentioned layoff, then you could just inform the employees that they were being furloughed. It's highly unlikely any UK contract is ever going to have furlough in it, but we would look at the layoff clause. If they don't have that, you have to consult. If you have less than 20 employees, the definition of consultation is a reasonable period of time. We would generally say 2 weeks. However, in this economic environment, it could well be less than that, so you could reduce it to a couple of days. If all of your employees just agreed it, then the consultation could be brought to a close early. If you have more than 20 employees but less than 100, it would be 30 days, and if you had over 100 employees, you would be expected to consult for 45 days. Can employees work and pick up emails? Well, actually, no, they can't. As I'm sure you guys in the States are well aware, when you're furloughed, it's actually a workless day. You're not permitted to work at all. It is advisable to turn their emails off or forward their emails onto somebody else while they are furloughed. They can actually volunteer if they wish to. They can volunteer somewhere else. What you couldn't do is furlough them, give them 80% of their salary, and then ask them to come back and work for you as a volunteer. That you'd get into a bit of a mess if you did that. So I would suggest that they could volunteer elsewhere for the good of the community, and our national health system is looking for literally tens of thousands of volunteers at the moment. Can they undertake training? Yes, they can. They can actually undertake training for you. So if they are furloughed, what you can do is you can put them on training courses, or you could ask them to do some online training, which is specifically related to their job. However, if you do furlough them and they fall below the national minimum wage or the national living wage, then what you would be expected to do is, during that period that they were taking the training, you would expect to uplift their salary so that it took them above those limits. In terms of picking who's furloughed and who isn't furloughed, then actually there's a couple of ways to do that. Generally, in the UK, if you make people redundant, you do a selection criteria. So, for example, if you have 6 employees and you want to downsize to 3, you would use a selection process. So you would say, basically who are your best people and who are your 3 worst ones, and your 3 worst ones would be the ones who are made redundant. Technically, furlough would work the same way. So you would elect to keep or retain your best 3 and furlough the other 3. What you can do, is actually you can furlough more than once. So you could bring somebody back. You could bring someone back for a period of time, and then you could furlough them again. As long as you furlough them for a full 3 weeks, you can take advantage of the scheme. If you only furloughed them for a week, you could furlough them, but you wouldn't be able to claim from the government grant. So we are now seeing this phrase of furlough rotation. So in the example where you have 6 people and you want to furlough 3, and you could furlough 3 of them, then bring them back and furlough the other 3. So there's a rotation between your 6 employees. Directors are eligible. One thing to be aware of, though, if you furlough yourself as a director, you aren't necessarily supposed to do any work. The definition on the guidance from the government is any services or any income generating activity. What you are permitted to do actually is to what you often need to do is to do things like file the accounts. So you could furlough yourself and file those accounts, that would be fine. Can furlough employees take holiday? Well, actually, it's an interesting one, this, because depending on who you talk to depends on the answer you get. But the fact is the government hasn't given any guidance on this at all. We're unaware whether or not people can take holiday during a period of furlough. According to the Employment Rights Act, which goes back to '96, then technically they should. But actually, if you look at the definition of layoff, which in the UK precedes furlough, during a layoff, employees are not permitted to take holiday. So in the absence of any guidance specifically around furlough, we would have to look at that. We would follow that guidance and say that actually, generally, no, employees cannot take holiday over that period. However, you could furlough them for 3 weeks, they could go on holiday for 2, and then they could be furloughed again. But over that period of 2 weeks, you'd have to pay them 100%. If you did furlough them, sorry, if you did allow them to take holiday during a furlough period, you would generally, the rule of thumb would be you would have to uplift to the 100% of salary anyway, but it could be that the government could then change the rules somewhat in the future and say that actually you shouldn't have done that. You now have to, you now owe them that holiday back. And because of the legislation change around minimum holidays, it's quite conceivable that that could happen. The government has said that you can take holidays, generally in the UK you have to take 4 weeks holidays as a minimum, plus 8 bank holidays or public holidays. That works out of 5.6 working weeks a year. What the government has said is that now you can, they're reducing the burden on that, and they're saying that employees can spread that over the next 2 years. So if you don't allow your employees to take their full entitlement in this year, there will be no financial penalty. So that does swing towards that after furlough. The government is expecting people to still have all this holiday left, but they're not expecting employers to force them to take it in what is relatively a short window of potentially July or August to the end of the year. Can we bring someone back early? Yes, we can. We've already explained that. And if we bring someone back, can we put them back on furlough? Well, yes, we can. I've already explained that as well. Can I have the next slide, please? Okay. So those not currently at work, so those people that are off long-term sick, what you can't do is start bringing people back and furloughing them. What the scheme was designed to do was to prevent employers making large-scale redundancies. So it is actually a job retention scheme, not a bring people back from sickness and pay them some more money scheme. So those that are on long-term sick should remain on long-term sick. If everybody else is furloughed and they, become better, and the doctor says that they're fine to return to work, then obviously they could return to work and you could furlough them. Furlough employees technically can call in sick because it's a right in the UK to ring your employer and say you're sick and not coming to work. But generally, sick pay in the UK is about £15 a day. So I don't know why, if you were furloughed at 80% of your salary, you would voluntarily call in sick to get a much lower payment. So yes, technically they can, but the chances are they wouldn't. There are currently 1.5 million shielded people in the UK. So shielded they were all written to by the government. They were told they were shielded. The reason they're shielded is because they're either over a certain age or they have underlying health conditions. They have underlying health conditions where they catch COVID-19. It's a danger to life, obviously. The chances of them dying is much greater than everybody else. Those shielded employees, if they obviously 1.5 million are not working, but of those ones that are, they can be placed on furlough immediately, and should be placed on furlough immediately if they work for you. Those on maternity leave, so maternity leave in the UK, there's 2 types. There's ordinary maternity leave, which is the period that you take off and you're paid generally, and there's additional maternity leave. So within additional maternity leave, they can't be furloughed, but what you can do actually is make a claim. So if in additional maternity leave you make an enhanced payment to those employees, you actually can make a claim for 80% of that enhanced payment. And those about to go on maternity leave, no, you can't just switch it to furlough. They actually have to go on maternity leave, because you'd be breaching all sorts of laws in the UK if you decided to switch them from mat leave to furlough leave. And can employees on unpaid leave be furloughed? Well, yes, they can, but you would struggle to claim from the scheme, because you'd be effectively claiming nothing. So it wouldn't really be worth furloughing those employees on unpaid leave. You'd have to wait until their unpaid leave element had completed and they returned, and then you could furlough them then. Go to the next slide, please. Okay, so redundancy in the UK, this was all, the whole job protection scheme was set in place to try and prevent redundancies. However, we have to be realistic. There were redundancies that were going on well before COVID-19 that were completely unrelated to COVID-19, and those should continue. If you were in redundancy consultation at that time, the chances or the reality to furlough them during that consultation period just really means that once this period is over, you would have to start the consultation period again. But actually the general rule of thumb is if you started it prior to this, it's not connected to this, then you should continue that process. You can if the consultation is unconnected to COVID, then you should carry on the redundancy. If your employee was made redundant because you were making redundancies because of COVID-19, and in March an awful lot of companies were, they were employed on the 28th of February 2020, but you actually made them redundant after that, you can reinstate them. So you could reinstate them, put them back on the payroll, and actually claim under the scheme. So if you made them redundant on the 5th of March, you could have reinstated them on the 21st or 22nd of March and claim for that period from the 5th, and which is why it was backdated to the 1st of March when it came out. So that really is a job retention scheme. You should only really do that if you are planning to trade out of the COVID-19 crisis. Otherwise, if you bring them back, you need to bear in mind that you may just have to make them redundant again. But the choice is yours. You're under no obligation to do that as an employer, and you take any decisions that you want to make there. And can you start redundancy consultation during a furlough period? Well, actually you can. So if somebody was furloughed, for example, but you know that actually even after this you're not going to need the role because it's no longer required, then you could start the redundancy consultation process during the furlough period, because redundancy consultation for the purpose of employment law in the UK is not classed as work, which is why you can consult with people who are on maternity leave and things like that, or people that are on sick leave. It works in exactly the same way for furloughed or layoff. Go to the next slide, please. Okay, can you talk to your employees? Well, yes, you can contact your employees. This is probably the most strangest period for us in terms of layoff, because generally over a period of layoff you wouldn't necessarily contact your employees unless you wanted them to return. But I think we have to bear in mind that there's an awful lot of people that live on their own, and they are furloughed. They're not allowed to leave the house apart from their one day of, or their one period of exercise per day. And I think from a well-being point of view, you probably should still contact them. There's a difference between contacting an employee to see if they're okay than asking them where they filed something on the system. So you need to be incredibly careful that you're not asking them to do work-related activity. I would definitely stay away from that, but certainly contact them, check in with them, see if they're okay. Try not to do it on a company email. Try not to do it on an internal messaging account like MSN Messenger or anything like that. Setting up things like WhatsApp groups is absolutely acceptable as long as you are doing it for that purpose and you're not doing it because you want them to do some more work. Okay, I think that's it. So cover the next slide, please. Yes, we've got a polling question.
Well, can I just, before we do the polling question, it's Mike again, can I just jump in? In terms of claiming the grants under this, firstly, you obviously have to have a payroll deduction scheme, a PAYE scheme, and that has to have been in place by the 28th of February. The second aspect of this is that you need to have registered to be able to operate that online. Now, not all employers do that, so if you've not registered to have your PAYE scheme dealt with through an online portal, you need to do so pretty quickly, because the claims for this are all going to be dealt with online, so they're not going to be any sort of manual forms that you post off to the tax office to make your claim. It's all going to be done online. Now, just to a slight warning on that is that if you register for your online PAYE portal, the tax office will send you an authorization code in a letter, and they will actually send that to the business address. So if you're all working from home, or your UK staff are working from home, and nobody's going into the office, nobody will be able to access that to get the code to actually operate the online portal. So you would probably need to make sure that the post is going somewhere whereby, or somebody's going to the office at least checking the post, so you get hold of that. And then the final point, I think, is, and I hope this is not an issue, is that the tax office were only going to pay this grant into a UK bank account. Now, I'm assuming that those of you who have UK businesses or UK subsidiaries do have a UK bank account. But if not, perchance you've got, say, a branch in the UK and you're operating through a US bank account, the tax office will not make a payment to that. So I think that was all I had to say. So back to you, Leon.
Thank you, Mike. Richard, two quick questions for you, and maybe one's a question, one's a statement or explanation. Could you go into the concept of redundancy slightly? Because it's not a concept generally that we recognize here in the US as a general rule. Could you enlighten a little bit on that?
Yeah, of course. The redundancy in the UK, so in the States, you tend to have fire at will. In the UK, once somebody's exceeded 2 years service, they have all sorts of employment rights. So you can't actually just terminate someone's employment. You have to do it through legitimate means. Generally, a redundancy is the way to do it. So it could be that a role no longer exists anymore, or you're outsourcing the role, for example, or it could be that you're downsizing. Either way, when you terminate that employee, you have to go for a period of consultation to explain to them that their role no longer exists, or to explain to them that that you're downsizing, you don't need so many people. It is a statutory right, and it's a statutory right to be consulted with. So you would say to them that this is the reason why. They have an opportunity to come back and explain why they shouldn't be made redundant, or give some suggestions to prevent redundancy. If after that period of consultation you decide that actually there's nothing we can do, this role does have to go, or a number of roles have to go, then you pay them out their notice pay, which could be 6 months or 3 months or whatever, and there's a statutory redundancy amount on top of that. So that's based on their age and their length of service. So if you're under 41, and it's a week for every year. If you're over 41, it's a week and a half every year. And obviously it's the length of service dictates how many years you've worked there. So it's not as simple as just saying to somebody, well, you know, we're terribly sorry, it's the end of the road, you've got a month and you can go. Does that answer your question?
Can we move on to the polling question?
Sure. Our last polling question is, who is providing better relief support, the UK or the US? Okay, and here are the results.
That can't be right. So I don't think we've got any typed questions on Zoom. I think, Leon, you had a question to ask. I've got one Q&A come through.
I think Leon may have lost his connection, so he may be having to dial back in.
Okay. just whilst we're waiting for Leon to come in, it's estimated that 9 million workers in the UK are in the process of either have been furloughed or will be furloughed, and we've heard, which is quite a large number out of a population of 65 million people. So it is quite a popular relief, and the latest speculation is that the cost to the government of this, in terms of the grants they're going to pay for the job retention scheme for this 3 months, is going to be roughly equivalent to our whole defence budget for a year. So we're talking about large numbers. We have a question. I think this is probably one for you, Richard.
Because we're not required to top up above the 2,500, should we be amending employment contracts? No, you don't amend the employment contract. If you have layoff in your contracts, then you simply just write to them telling them they're going to be furloughed, and explain that they're going to be paid 80% up to the 2,500 maximum. If you don't have that, you can just do a simple contract addendum which just states that they're going to be furloughed. That avoids the need to have a consultation process, really, because they just agree to it. If they don't agree to it, you need to go through the consultation process. The best thing, obviously, would be if you had layoff in your contract, you wouldn't have to do any of that.
Thank you. Well, there don't appear to be any other questions, and Leon doesn't seem to have been reappeared. So
I made it back, Mike. I made it back. I had a complete power outage and I had to jump to a hotspot, believe it or not. Apologies for that.
Okay. I mean, on the presentation, which is going to be circulated, is the website address for Moore Kingston Smith, and that does have a coronavirus section which provides some useful backup if attendees to this webinar want to actually read a bit more. So, any questions from you, Leon?
Can I just say one quick thing? Actually, it's just sprung to mind. So anybody who's got a visa, if they're on a restricted visa, which is a tier 2 visa in the UK, they have to earn a certain level to be on that. So if you furlough them and the 2,500 they fall below the level that their visa requires, you will have to top up. So you'll have to top up that amount to ensure that they're not going to be deported effectively.
Excellent. I don't think there's any further questions at this point. Panel, I greatly appreciate everybody for joining today, and thank you for your time and participation.